Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing rates unchanged, you'd have to say, for the markets. So the Bank Nifty is still showing a downtick of around 65 odd points. We have the Nifty, which is up around 0.3%, and the mid-cap index, which is doing better with a gain of around 0.7%. Overall, advance decline ratio is on the advancing side, so around 2,200 stocks advancing to around 1,800 stocks declining on the Bombay Stock Exchange. Well, joining us today, we have Rajat Bose and Parthiv Shah to answer all of your stock queries. Rajat as well as Parthiv, welcome to the show. Well, before we kick off the show, that mandatory technical check. Rajat, today maybe there is a little bit of wait and watch ahead of the Fed meet, but 25,000, do you think that's probably going to be round the corner, or is it going to take some time?
Well, 25,000 is a major landmark level. The earlier high had been 24,998. Now, even if you go beyond 25,000, 25,111 is a Fibonacci level. So I take it this way, that 25,000 to about 25,150, this is the supply zone, this is the resistance. Once it is taken out, then you can see long road ahead, meaning that beyond 25, before 25,600, there is no such resistance as such, even if you do some projections. And it could even go beyond 26,000. But 25,150, I need to see that it is taken out. There is a crucial meet. Let's see how things pan out. But as of now, we have to say that all dips are likely to be bought.
Okay, all right. All dips are likely to be bought. Well, that's the word coming in for the technicals of the market. Any word on M&M, Parthiv, before we kick off the show? Just came out with its numbers, holding with a gain of around 1%.
Good afternoon, Ekta, Rajat. Yes, Ekta, I think very fine set of numbers, and more importantly, I think they have held on to their market share in the SUV segment, and they have very interesting pipeline going ahead. We are very upbeat on their farm equipment segment, and the management has reiterated that, and probably hoping that H2 for this year should bode very well for their high profitable farm equipment segment, which brings in better EBIT margins. And overall, I think the management is doing all the right things. The capital allocation policy has really worked well for them, improving the ROE trajectory for the company and for the shareholders. Going ahead, I think after the recent correction, we are upbeat on this company for the long run.
Okay, you're upbeat on the stock. Any target price on that?
I think 3,200 seems to be on the card for this year.
Okay. All right. Well, we have Rajat Kumar, who writes to us from Karnataka. He holds 243 shares of Canara Bank, which he's bought at around close to 120 odd rupees. He's sitting on a loss there. Wants to know what to do, whether he should hold or sell this particular counter. Well, I'm going to toss it over to you, Rajat, on this one. On the technicals, does it look promising first to start with, Canara Bank?
It had been promising when it started its journey from around, say, 60 or even, say, 100. But now, at current prices, I see a distribution, both on the weekly chart as well as on the daily chart. So my suggestion is that get out of this, book profits. That would be a better idea. Because from here, unless it takes out 130 decisively, it is unlikely to go further up. Probability has it that it would actually come down. At least it will come down to levels around 100 to about 95. And after that, a fresh move can happen. If the investor is willing to see such downsides and carry on, definitely no problem.
Okay, all right. So that's on Canara Bank. Fundamentally, how would you approach the stock, Parthiv, Canara Bank?
Fundamentally, I think Canara Bank is one of the finest PSUs, and more importantly, I think what we like is that in their corporate book, I think which is almost 6 lakh crores, I think the division in terms of the different verticals is very good, and they've improved their underwriting standards. And since many quarters that we've been tracking Canara Bank, I think we see that the net slippage ratios have come down and the asset quality has consistently improved. And I think it's a very good cycle for a lot of such PSU banks. And going ahead, I think even the retail assets, especially where 60% of the book is in the housing segment, I think that is also quite stable and growing well. So our sense is that yes, after the massive run up and a massive re-rating from its very low price to book multiples of 0.7, it's now quoting at around 1.4 times forward FY26 price to book multiple, which is a little expensive on historical standards. But I think the quality of the book has not looked as good as before. And more importantly, I think if you see the fundraising ability of the bank, I think that is fantastic. They might even monetize some of their subsidiary stakes in their in their IPO holding in the asset management company, which is the Canara Bank. And I think that should also garner them good capital for future growth.
Okay, all right. Well, we now have Samir, who writes to us from Mumbai. He holds 60 shares of Indust Towers, which he's bought at 210. He wants to know the short-term view of this particular holding. He's ready, I think, to hold it for 6 months. So in that context, he's sitting on a profit at this point in time. So his entry price was 210. So that's a good price to enter at. But fundamentally, what would you recommend, considering that Indus Towers is reacting negatively to the buyback announcement as well as a possible margin expansion which came through as well? That was because of a write back on provisions. But nonetheless, your view on Indus Towers fundamentally?
See, fundamentally, I think the results were kind of in line. Nothing so exciting as to re-rate the stock further, because we realize that this has done extremely well over the last 2 years, especially with the fortunes of Vodafone Idea changing and them exiting, along with the fact that Bharti has continuously upped its stake. And now I think it's called as a Bharti Group company, which is, I think, giving a lot of confidence to the market. And also the buyback at around $465, I think that's not something that really excited the street. Generally, a lot of these buybacks tend to happen at a lot more premium, and that's the key reason why the stock has not really done well post the results and also the buyback announcement. But fundamentally, I think we are upbeat on this space, because I think they're going to do a capex of almost 9,000 crore for the new age 5G towers, and which will bring them better rentals. And I think it is India's one of the largest tower renting companies. And I think the way ARPUs are going up, that should incrementally benefit such tower companies. But yes, currently I think it's priced to perfection, so might consolidate for some time before the next leg of rally starts.
Okay, all right. Well, now we have Dheeraj, who writes to us from Hyderabad, holds 90 shares of CreditAccess Gramine, which he's bought at around 1409. So he's sitting on a loss. He wants to know what to do, whether he should book his losses or stay invested in this particular counter. Well, Rajat, over to you on CreditAccess Gramine. What would you recommend on the technicals of this particular stock? He's sitting on a loss. Is it possibly going to get back to its buy price, to the buy price at least of 1400?
At least at the moment, what I see is that on the weekly chart, there is a 20-week and 50-week moving average bearish crossover. This suggests that there would be further fall, but unless it falls below 1200, I would suggest that consider that as the Lakshman Rekha or your stop loss. You continue to hold it, because there could possibly be a bounce when it may test 1400, and at that point of time, he can get out of it.
Okay, all right. At that point, he can probably exit. That stock has not done much in terms of a 1-month chart. It just came out with its Q1 FY25 numbers recently itself. And the near-term outlook, according to a couple of analysts, was a little pessimistic. But in any case, that's on CreditAccess Gramine. Welcome back. Well, we still have Rajat Bose and Parthiv Shah to answer all of your queries. Well, let's get going on a couple of more questions that we have. We have Shamal Chatterjee, who writes to us from Dehradun, holds 500 shares of Bharat Electronics at 276. He can hold the shares for 3 to 6 months and needs advice on the same. Where Bharat Electronics 276 sitting on a good profit. And I think a lot of people have this query with regards to stocks such as Bharat Electronics. And Rajat, we've spoken about this many times before, that maybe it could be prudent to take some profits off the table. But for this stock, what would you recommend?
Well, unless you are planning to go for the top whenever that happens, if I were in his or her position, I would have booked profits, because it has been on a tear and it has been moving up. Barring this week, the last 2 weeks prior to the current one, it showed quite a bit of weakness, but it bounced back. Yet, I would suggest that one should actually take the profits and go home.
Okay, you would take the profit and go home. And what about you, Parthiv, on this particular counter?
My sense is that yes, I agree that book some partial profits. One has got a stellar return and hold on to the remaining position. If you look into the current valuations, the stock is quoting at around 50 times next year earnings. But I think if you look at the order book, consistently it's going up. Currently, the company is sitting at an order book of almost 65, 70,000 crores. Previously, I think 3-4 years back, this was a company which used to manage order book of around 25,000 crores. And they've upped their execution. They're doing extremely well. They have a lot of technology tie-ups with different defense players. As a result of which, this is not a company which will be restricted to any one vertical of the defense space. But I think they are really diversifying their order book and their execution capabilities. What we also like is that this company is also looking at a lot of space-related technology development, a lot of products in that segment. That can also be huge going ahead. Also, I think if you see, they have got some orders in that segment, but that is something that we have upbeat on. Maybe there's a possibility, and the government did hint that companies like BEL could be heading into chip designing and chip manufacturing. If something of that were to happen, the company has the balance sheet strength to execute the same. So I think for a very long-term view, we are very, very upbeat on this company, but short to medium term, because of the massive run-up, do take partial profits.
Okay, so you would recommend taking partial profits. That stock has run up around 140% just in the past 1 year. So joining the list of a lot of the other PSUs which have gained. But Srinivas now writes to us from Chennai, holds 500 shares of M&M Finance, which he's bought at 292. Wants to know what to do, whether to hold or sell this particular counter. So M&M Finance, it's sitting on a good, reasonable amount of gains there. 500 shares is what he's bought. Would you recommend this rural play on a longer term basis, Parthiv?
Yeah, as you're also aware that M&M Financial has not really done great for its shareholders over the last 5 years. And one of the key concerns being, I think, a lot of delinquencies in its rural segment loan. And more importantly, I think the management has put in a lot of efforts to turn this around. And going ahead, I think one of the reasons why the stock has done reasonably well of late is because I think there's a confidence coming back that, now the book is looking better. A lot of loans that were bad were written off. And now the capital adequacy is also coming to the normalized levels. And going ahead, thanks to the fact that so far the monsoon has been reasonably good, the rural economy should pick up. There's been a decent budgetary allocation coming from the budget as well, which should help companies like M&M Financials for better recoveries. So I would suggest, I think, because the valuations are not very demanding, quoting at 1.6 times forward multiples, I think hold on for the next 6 months, review your position after that.
Okay, review your position after a few months. And technically, M&M Finance, how does it look to you, Rajat?
I would concur with Parthiv, and I would say that the 200-week moving average is around 239. I also believe that going forward, this company might do well. So use that stop loss because that's a major support. It's not 200-day moving average. It's the 200-week moving average, roughly translated 1,000-day moving average. So if that gets taken out, then definitely get out. Otherwise, you should stay put. Probably you will see a good move if it crosses 325.
Okay, a good move if it crosses 325. So that's the target coming in on the technicals of M&M Finance. Well, for the other counters which are doing a little bit today, Dishman has really stood out today. So that stock is up around 15%. It's gained around 13% this year. So it surpassed that gain just on a daily basis. Doing very well, Dishman. There's no specific news. Numbers have still not come out. So that stock continues to gain. Wockhardt is at around 922 odd rupees. That stock has been a complete rank outperformer this year. It's gained around 117% year to date. Z Entertainment reacting to its numbers that just came out some time ago. That stock is up around 4.5% as we speak. But this is what's taking place in the markets. The Bank Nifty is just about marginally lower at this point. Mid-cap index holding up well. That's all the time that we have on the show, but do remember to email us your queries. We'll address them with our experts. Stay tuned. Closing bell to take you through the last hour of trade.